Hi, welcome to the first video of Signal and Structure. I will guide you through setting up, charting, and trading in crypto from my 5 years of experience hands-on, plus in crypto, plus some years in forex. I've been through the ups and downs of trading. I've lived it, I've breathed it, and it's become a part of my life. I tend to look at things a bit unusually in a different way. So my lens is original. I admire authors like Gann, Wyckoff. I try to find my edge in a different perspective. I also create indicators. I've made over 140 indicators. Obviously, not all are fire, but some of them are pretty good. And in my trading style, I will at least use one and also show you how I've built it, and hope you enjoy and make profits with me, because I'm here to help you grow. I'm already, well, I don't want to say established, but I do this more for fun than for the money. I do this for money, but my income comes from running a successful business, and trading is a passion. I try to enjoy my family, my good health, and just make this an interesting journey through life. Okay, enough introductions. So here we have a basic Bitcoin chart. And the first thing I want to show you is the scales. Perhaps many of you are experienced traders and you know this, but for the beginners, here is a little settings thing in the price under the price panel, and automatic. I use that because it fits the data to your screen, but also what I'm talking about here is logarithmic charting. And for me, this is essential. The first thing I do when I see a chart, I click log scale. Well, in crypto, because crypto moves at such a pace, and normally these moves are exaggerated. And if I had shown you an altcoin chart, you would see exactly what I'm talking about. But I think the Bitcoin chart also presents this neatly. Look here. We start. This is a Qcoin chart, right? So this is October 2017. We're not even going back to 2015, 2013. But look, from $4,000 to $19,000 in traditional assets. This is astronomical. That would be something like 300%. And these are big moves. But looking at the whole history from that point, it seems like the price was just standing still. This whole this whole, what is it, 3 years, it wasn't standing still. The price was moving. And then you see this huge astronomical liftoff, right? But now look, compare this to the log scale, and everything is in perspective now. You see that these moves were of a certain magnitude, and they were substantial, right? You can now see the waves, the actual movements. You can also notice that here, from that COVID crash low to the 2021, 2022 tops, the rise was also important. And as you can see that here, that is clear. But you would think that the next rise is something spectacular, right? From, let's say, 16K to our recent all-time high, 120K. And perhaps looking from 2020 to 2025, yes, it does seem volatile and exaggerated, but looking at log scale, this is actually showing you that Bitcoin as an asset is stabilizing, maturing. So in fact, it's not doing the numbers it used to, and log scale can show you that, especially if you're not on the monthly chart as I am, but if you're on the 3-hour chart in an altcoin, you would see that the log scale works great to, as Gann says, step away from the charts, move your eye away, so zoom out basically, right? Log scale helps you to zoom out and not get caught in, a false perception of the magnitude of these moves in relation to the history, right, of the price moves. Okay, so not only that, because as I'll go through my charts in different episodes, I'll show you how the trend lines and things like that work differently in log scale than they do in regular scale. Okay, so that's just me. I will always use log scale and probably never switch back to regular scale in crypto. All right, the second thing I want to talk about here, for starters, is the time periods that I have set here, and they are all deliberately chosen, and it's been a few years in the making. Also for clarity, I only have 5. I used to look at all the I used to have like 6 hours, 7 hour, 8 hour, 9 hour, so on, right? Every hour, basically, different types of minutes, weeks, but that's just noise, and it's going to create confusion. You don't want confusion in trading. You want to simplify things to you want to distill the essence, right? Because trading is simple. The price can go up, price can go down, or move in a range, mostly flat line, right? So why would you complicate that to such a degree? You need to keep it simple. Okay, now take a look. The time frames are 1 month, which is 30 days. If you divide a month by weeks, 30 or 31, right? You get roughly 4. Okay, so let's keep 4 in mind, and I'll show you how this sequence works from 1 month to 1 week, 2 days, 12 hours, and 3 hours. Perhaps some of you who are skilled or able in pattern recognition probably see the pattern here already, and the fact that I mentioned 4. Okay, so let's go like this. Divide 30 by 4. You get 7.5. Okay. So that's days. 7 days is 1 week. Okay. Now, if you take the 1 week and divide it by 4, it was 7.5, right? So let's round it up to 8. 8 divided by 4, a week divided by 4. You cannot really do this because it's 7, so it's going to be messy, but we have to, approximate this. So it's going to be 2. So we start with the month. That's the basic unit. It's non-arbitrary, right? You can use years, but in crypto it's useless because you would only have a few bars. So let's go with months as the pillar. Then you go into weeks. That's a month roughly divided by 4. Then you take the week and roughly divided by 4. That's 2 days. Okay, so I have the 2-day chart. And if you divide the 2 days by 4, that's easy and clean math, because you're going to have 48 hours divided by 4 is 12 hours. So the next one is the 12-hour chart. And finally, now it's very obvious what I'm going to do. Divide the 12 hours by 4. And that's 3 hours, okay? So, also, another thing is, apart from the obvious month and week chart, we want to have we want the best of both worlds, okay? So we want to see what everybody sees. And a lot of people, trust me, are looking at the monthly charts. When beginners come into any type of asset trading, like be it currency, stocks, or crypto, they tend to look at like the daily chart, 4-hour chart. They're zoomed in, but through years of experience, you learn about something like high time frames and levels that these candles and frames create, right? And these are usually wicks and candle closes or candle opens. And the monthly is the strongest period apart from the yearly, right? So we as we take the monthly time frame as our base, we have to respect that, and we have to treat each monthly candle, especially a top and bottom one, very seriously. Okay, and that's what everybody does. So we're in the same frame as everyone. All the institutional traders, all the small retail. Well, maybe not so much. See, the retail doesn't care about the monthly, but this is our advantage here. We zoom out. We see the big picture. You can see a lot of Bitcoin history on a chart like this. I can switch to BTC USD. I don't like that because it doesn't show you volume. Okay, when it's just to the dollar, a lot of the indicators will not work that I'm using because they base on volume. So I like to have a price chart from a currency exchange. Anyway, here you see, and in log scale too, right? Bitcoin's history. If I turn off the price scale, it looks something like this. You see what happens? Look at the basically left side of the chart. You would think there is nothing going on here for so many years, from 2009 until 2017. What, was Bitcoin dead? No. The fluctuations were incredible even back then. So go to log scale. You see what happens. You see the history now. Okay. Anyway, I'm here on this chart about showing you the monthly candles. Okay. So that's the history, and if you have a big enough monitor or a good resolution monitor, you can use these and they will show you the entire history, right? Okay. Now, I will go back to the chart that I'm using. I'm using my own. It could be Qcoin or Gate because these are the two I'm using currently to trade. So here is the monthly from an exchange. So if I apply volume, it will show. Go to the weekly, and the weekly chart is another frame that everybody looks at, and even more so because if some people forget about the monthly, if they're amateurs, they will probably stumble upon and look at the weekly. The weekly is a very popular chart. A lot of the analysts show you the weekly charts and stuff, right? As I said, I used to play around with something like the 12-day, something like the 16-day, but I have distilled it because too much confusion creates chaos in your trading. So you don't want a million frames, okay? Now, if we have the monthly, that is looked at by the pros, and if we have the weekly, which is looked at by everyone, the next obvious frame would be the 1-day. But here I'm not going to use it because it would violate my rule of dividing the frames by 4, right? So it's kind of like a fractal approach. I use the 2-day because if I have the combination of the 2-day and the 12-hour, somewhere in the middle you have the 1-day, right? So I will see certain things on the 2-day that correspond with the 1-day, and I will see more on the 12-hour like that. But I will not look in my default view at the chart that everybody's looking at, right? You need a certain edge. Imagine there's a crowd of people standing in front of you. They're looking down. They're standing on a cliff. There's something in front of them, and they're looking down in front of you, and you're in the back of this crowd. You can't even see past them. But what if you take the left or the right and slightly move behind the crowd, and at an angle you can approach the cliff a bit more because there's more space. So that's what the 12-hour on the left and the 2-day on the right would do. it would give you a different angle to look at things, right? If I want, I could be standing in the crowd on the 1 day, but it doesn't give me any edge. Okay, so then you have the 12-hour. If I double click here, I can adjust, and this is what I often do. I keep a little bit of space here below the lowest wicks and above the top wicks, right? And then you can adjust this as you want. And the 3-hour, which is the most hectic, the most responsive, and the least reliable, because what happens on the monthly, you have to understand this. Moves on the monthly, if there's a trend starting, they don't get faded quick. Look here, that's a bullish engulfing candle on the monthly after a very nice long wick, absurd wick. So this, like, that's a signal right there. And the monthlies continue all the way to the top. And you see this one, that's a telltale sign. All right, another one like that, spinning top. You have two spinning tops right at all-time highs. So the monthly candles tell a solid story, and their shape is very important, and their sequences. Okay. But if you look at the 3 hours, of course these have significance, but the sequences, can you notice we didn't have that on the monthly? We didn't have as many spinners in a row, right? We didn't have those crazy zigzags like that. These are just more chaotic. You have to understand, like, if you come into charting looking at small frames, you're going to basically look at like broken glass. Okay, you don't want to see broken glass when you try to assess the shape or size of something that has structure. You want to see, you want to see something beautiful, something solid, something that is actually a representation of harmony in nature. Okay, so I'm not saying that the 3 hour or the 3 minute don't have harmony. They do, but it's more complex. It's psychology plus math plus secret math. Like, we'll get into that later. Okay, Gann angles and Fibonacci's, like even not the regular Fibonacci's, but other ones. Okay, so remember that the higher frames are more structured because they're made up of these layers of chaos that over time settle, and then you have proper structure. That's also why the channel is called structure and signal, because the signal that is certain can come from a clean structure. Okay, so the weekly also has nice structures, not so chaotic. The moves are clean, but they are more chaotic than the monthly. Now if we go into lower frames, like the 2-day and 12-hour, you will see more of that happening. So it's much easier, and that's the whole thing. You want trading to be easy. You don't want it to be confusing. Okay, but first, I mean, you start, you think it's easy, right? When you start trading, then you learn your lessons, and some like most people quit because it's just too hard for them, it seems. Well, it's not hard. You just see a price go up or down, right? The bar can be either green or red, and you have to catch the right moves. So this is it. But for many people in the beginning, if they give up, they say, oh, trading's too hard, it's too complicated, it's crazy. It can be, because intentionally the markets have to confuse you, and they have to play you and mess with your mind, and that's just, a whole universe of tricks. Anyway, that's only if you let the tricks mess with your mind. Okay. The video is telling me I should finish in about 20 seconds. So thank you, TradingView, for showing that. This is the first part in a series. I hope you got the basics with me. Please copy those, add them add these frames to your repertoire, and we will continue. See you next time.